Hi, I'm Brett Swarts, founder of Capital Gains Tax Solutions. We're going to cover what are 3 reasons every commercial real estate syndicator, operator, owner should have the Deferred Sales Trust as one of their tools that they use or consider in every single transaction. So as a quick background, I started at Marcus & Millichap in 2006, and we learned about the 1031 exchange on about day 3. And we used it in every single conversation that we were a part of to help people create and preserve more wealth when they go to sell their highly appreciated commercial real estate. And you probably know about the 1031 exchange as well. However, there's some inherent challenges, especially as it comes from the perspective of a commercial real estate syndicator or operator, when they go to attract high net worth wealth, when they go to defer their own carried interest, and also when they want to go to maximize the returns for their investors. So let's talk about the first one, maximizing returns for investors. Every single deal, either clients coming in to you with new money and or exiting, probably has an expense, right? And here's the expense: 30 to 50% of the gain being wiped out by capital gains tax and depreciation recapture. So for example, if a new investor is coming to you who's a accredited investor and is selling a highly appreciated asset, they're probably having to pay 30 to 50% just to get that money that's in an illiquid asset to you, right? Which means it's a big expense. That's the first thing. The next thing has to do with when you go to sell your deal, right? What happens? Well, 30 to 50% is probably going to be wiped out by the depreciation recapture and the capital gains tax. And again, that's another big part of the game. So your intent is to maximize their returns. And the problem is you can't do a 1031 exchange in and out of your deals. At least for the majority of the syndicators we work with, the whole entity must move. So most of them don't even accept new 1031 money, A. And then B, they don't do another 1031 when they sell. They just sell, pay the tax, and go do the next one. Here's the solution: the Deferred Sales Trust. What's really unique about it is it's not only going to defer the capital gains tax and the depreciation recapture as long as there's no mortgage over basis, but it's also going to give the ability for those same investors to invest in your next deal, all tax deferred. So consider the Deferred Sales Trust as in a way to maximize the returns for you and your investors by saving them 30 to 50% on the when they come in, and 30 to 50% when they're going out. The second reason you should consider this, and you should have this as your tool, is the fact that you want to be able to not only attract but also unlock the capital for these high net worth investors. So let's walk through that. According to the American Bankers Association, there's about 50% of all America's net worth is tied to high-end primary homes, commercial real estate, or private equity, which is businesses. These are illiquid assets that are highly appreciated, especially for baby boomers, right? Which again, according to the American Bankers Association, is about $17 to $20 trillion, which will pass from one generation to the next in the next 20 years. And this is known as the largest wealth transfer in the history of the world. In fact, there's about 77 million baby boomers in the US alone and 10,000 baby boomers turning 65. And what are they challenged with? Well, they're challenged with these illiquid assets that are highly appreciated, that they want to sell and get diversified, get liquid. They actually, in fact, want to give it to someone who has a proven track record in commercial real estate like yourself, but they don't know how to get from A to B without getting hammered by the capital gains tax and the depreciation recapture. So what's the solution? This is the Deferred Sales Trust. It's the Deferred Sales Trust for these 3 reasons. 1, they're not only going to defer the tax, but 2, it's going to get them out of having to actively manage employees, toilets, trash, liability. 3, it's also going to get them out of debt. And then it's going to give them diversification, liquidity, and then if they invest with you, the ability to receive cash flow off of that equity through the Deferred Sales Trust. So the last reason you should consider the Deferred Sales Trust has to do with yourself. This is more of a selfish reason, but it's a good reason because it's ultimately going to help you do more deals, because you're going to be able to defer the capital gains tax on the sale of your property as it pertains to carried interest. Okay, so carried interest is more like sweat equity. It's the percentage of the deal that you receive for putting the deal together and managing, and you're finally going to see a harvest after all your blood, sweat, and tears, making everybody hopefully a bunch of money on your deal. But now you're faced with your own part of carried interest, which is taxes, capital gains tax, again, which is 30 to 50% of your gain. So why not use the Deferred Sales Trust? The Deferred Sales Trust will defer all of this. You can move it into your own individual trust, apart from every single one of your investors, and then you can use those funds again to fund your next deal. So those are 3 reasons you should consider Deferred Sales Trust for yourself, for your partners, and we hope that you learned something from this video. But more than that, we want you to reach out to us. We want to be able to teach you this strategy, get you comfortable with who we are and how we work, and look at our track record of over 2,000 closes, 23 years, and some of the really successful business partners across the U.S., including financial advisors, commercial real estate brokers, and operators and syndicators like yourself. So look forward to connecting with you soon. Thanks so much for watching this video. Check us out at capitalgainstaxsolutions.com.